Imagine it's 2028. Bitcoin reaches one of the most important milestones in its history. 99% of all coins ever to exist will have been mined. That leaves just 1 million Bitcoin left forever. But this isn't just a milestone on paper. It's the start of a new era, one where scarcity takes over the market narrative, where governments, companies, and everyday people are forced to fight over an asset that's running out. Let's break it all down. What happens when the supply dries up? Who will be competing to get in? And why, for early movers, this could be the biggest wealth transfer of our generation. So what does 99% mined actually mean? By 2028, Bitcoin mined supply will reach 20.6 million out of fixed 21 million cap. We're talking about the block reward of just 1.5625 Bitcoin per block, meaning the entire global mining industry will produce only about 225 Bitcoins per day. Let's compare. Today, it's 450 Bitcoins a day. 2028, 225 Bitcoins a day. 50% drop in new supply. And from 2028 to 2140, only 329,000 Bitcoins rewards will be mined over 112 years. Most of it locked up in ever-shrinking block reward. Imagine the global gold industry suddenly cutting new mining by 50%. Now imagine oil fields drying up 50% in the world of rising demand. That's what we're about to see with Bitcoin. And the punchline? Daily issuance will become irrelevant, and existing holders will control nearly the entire market. If you want to understand how the US can become a global mining powerhouse despite these changes, check out the best states for crypto mining in the USA and the podcast with Ryan Knuckles. I break down where the miners are heading and why Texas is the best place to be. The deflationary explosion. Post-2028, Bitcoin's inflation rate drops to just 0.4% per year. For perspective, gold 1.5 to 2%, US dollar historically 7 to 15% of money supply growth per year, and emerging markets like Argentina, Turkey, sometimes 50 to 100% annual inflation. Imagine that. That makes Bitcoin the most verifiably scarce asset on Earth. And by the way, we've seen this pattern before. In 2012, Bitcoin jumps from $12 to $1,100 per coin. In 2016 halving, $650 to $20,000. In 2020 halving from $8,000 to nearly $69,000 per coin. But the next stage is different. It's not just retail and tech nerds. We are talking sovereign players, governments, hedge funds, and nation states. Who will be buying Bitcoin in 2028? First one would be nations. Governments won't be able to mine their way in. If the US wants to hold 1 million Bitcoin, approximately 5% of total supply at $675,000 per Bitcoin, as a 2028 estimate, that's a $675 billion investment, more than Pentagon's annual budget. China, Russia, and oil-rich nations such as Saudi Arabia may start stockpiling Bitcoin as geopolitical hedge. Second, US states. Crypto-friendly states like Texas, already hosting 1/3 of US mining hash rate. Arizona has just passed Bitcoin reserve bill. Wyoming and Florida. Miami has its own initiatives, which could set up state reserves, buying from $10,000 to $100,000 Bitcoin each. Cities and local government. El Salvador already holds 6,150 Bitcoin. Cities like Lugano, Switzerland, and Miami are piloting Bitcoin bonds and payrolls. Expect more to join. Corporations and funds. Strategy owns 500,000 Bitcoin. Tesla over 11,000 Bitcoin. And post-2028, we may see sovereign wealth funds, pensions, insurance giants quietly building Bitcoin positions. Retail investors owning 1 Bitcoin, you are top 1% of holders. Owning 0.1 Bitcoin post-2028 might be like owning a gold bar. Rare and symbolic, but valuable. If you want to explore which altcoins might rise as Bitcoin becomes more scarce, check out my video, which is called Forget Bitcoin, Which Cryptocurrencies Might Take Over, found here. The scarcity feedback loop. Here where it gets wild. Every new buyer removes supply from circulation. make it harder for the next to buy. This is the example of a feedback loop. Nations start buying, price jumps. Hedge funds and asset managers follow. US states pile in, cities and companies on X. Retail FOMO wave hits last. No central bank, no Fed, no miner can print more Bitcoin out of thin air to cool the market. This scarcity loop is designed into the system. It's what sets Bitcoin apart from everything else. The economics of the gold rush. Early movers win. Latecomers pay more. Example, Strategy bought almost $500,000 of Bitcoin, averaging the price of $65,000 per coin. Potential future value? Well, according to Michael Saylor, it may be $1 million per coin. So, it's a massive gain. Early El Salvador's buys may turn their treasury into one of the most valuable per capita on Earth. After 2028, annual new supply, only 82,000 Bitcoins. Compare that to our current corporate purchases. Strategy alone has herded more than 6 times of the post-2028 supply. We are entering a phase where liquidity matters more than mining. And even billionaires may struggle to get the large positions without sending the price sky high. 2028 isn't the end of the Bitcoin story. It's just the beginning of the most important chapter. Bitcoin is going beyond tech circles and speculations to become a strategic reserve for nations, a geopolitical asset with real influence, the most scarce store of value on Earth. We are moving from an era of easy money and unlimited printing to a world where hot assets matter again. And Bitcoin leads that shift. After 2028, it's no longer just about traders and early adopters. It's about governments, institutions, and individuals all competing for a piece of something finite. The key question is, will you be part of this era or will you be left watching from the sidelines? This is the Bitcoin era, and it's only just getting started. So let me ask you, are you preparing for 2028? Do you see Bitcoin as the new global gold standard? What's your personal staking strategy? And if you learned something in this video, give it a like, subscribe, and share this video. Let's keep talking. My name is Sergii Gerasymovych, and I'll see you in the next video.